Hey traders, Shane from GMT Futures and FX. I just wanted to take you through our strategy, which is our trend trader, and we're having a look at our Renko charts here. Now, if you're unfamiliar with Renko, they're a great way to trade, obviously, because they clean up a lot of the noise, particularly really good charts for the Forex market, because they take away a lot of that mess and noise that you get on your charts that really is distracting when you're trying to work out what position to play. So you'll see here from the information I've got is that that we basically have our dynamic support resistance here on our chart. So dynamic support is the green and dynamic resistance is our red. Now they'll print where we get areas or zones of support and resistance. So once we break that area, we're actually into a potential trending situation. So you can see for us that trend is dictated by these cyan candles, or cyan bricks they're called, obviously on the trend trader. Now the cyan bricks, each one of those bricks is worth 0.0008 of a point. So basically on the euro US dollar, we've got 8 pips for every brick that we've got allocated here. So we can dictate what the size of what the brick size is. We do that obviously in format symbol. You can go in and set the brick size. Now, one important thing when you're trading Renko bricks on TradeStation or any other platform, you need to anchor your date, because what'll happen is if you don't put an anchor point on your date, then when you load your charts up, they're going to start building charts from that next date that you've put in. So to make sure that you've got accuracy, that you've got continuity of performance, and that your trades don't shift and change, you've got to make sure that you anchor that date and that date remains the same. Now, as you can see, we've got our date anchored. The other thing is that when you're tracking your system in real time, you need to make sure that whatever your stop or target is, it's a multiple of your brick size, because in this strategy here we've got an 8 brick Renko, so 8 pips for every brick that we've got. So any stop that we run, and you can see we've got our trailing stop here, these are our little green dots, our TP stop. Any stop that we run needs to be a multiple of that 8 bricks. So if we have a say a stop of negative 8 points off that trailing stop, then that's okay, that's going to get taken out. But if we had that at say -4 or -2, then that's not a multiple of this brick size, and it's not going to be reflected in the results. So it has to be an actual multiple of the actual brick size. So that's very important for accuracy as well, because we don't want to be testing and doing our back testing and then go live and realize, oh look, the results look fantastic, but in real time, yeah, not so good. So they're two important things. Obviously when we get a short set up, they're very easy. We break support and price starts to move below our support line, and we get the white bricks. So the white bricks are our short setup. So you can see here that, and I'll show you what our performance has been on this strategy here. This one is very consistent. It's SN151. It tracks really well. I mean, occasionally you're going to find that, particularly like realistically, if you're looking at your results and you're looking at your performance on the Renko charts, you should be looking at around about 80% of your overall profit, because sometimes when you're trading in real time, you're going to get knocked out of these trades just on the spread. So you need to be cognizant of the fact that you need to have a strategy that has as I've mentioned numerous times, a good average trade net profit. Don't be lulled into the overall net profit being the driving factor. You want to make sure that that average trade net profit is fat enough to take the spread on the trades. And this strategy here is performing very well. We've got a number of systems who trade on our emerging managers platform, a number of traders who use these Renko charts. They definitely don't get 100% of their performance that they test up, but it's around about say 80% is what I'm seeing coming through on their trading statements. So but the beauty about Renko is that you can get some really good results in your testing, and as long as you anchor your charts, have your multiple target and stop as a multiple of your brick size, and manage your spread in relation to having a good average trade net profit, you can do really well using these charts. And they're very easy to visually look at and trade. So they're they're definitely very appealing to a lot of our traders, but you've just got to understand the little nuances that come with trading Renko. So that's all I wanted to do. I just wanted to quickly show you the performance of SN 151. We'll just have another quick look here. It's got a very low drawdown, 280. The average trade net profit is a massive 117, so the ratio of average win to loss is 3.38, which is huge. The overall net profit on this one for the last couple of months, 7281, so that's fantastic. Good distribution between longs and shorts, we like that. That's a nice balanced strategy. So, and the win rate 66% overall, which is really good. So traders, that's a quick recap of SN 151 Euro US dollar trading the Renko on the Trend Trader. Cheers. Thanks for joining us today, traders. If you'd like to become part of our team in 2014, it's very simple. All you need to do is contact either myself or Luke at info@gmtfutures.com and we can get you started pretty much straight away. So if you've always wanted to become a professional trader and you want to start using a high performance automated system, then definitely send us an email, info@gmtfutures.com or shane@gmtfutures.com, or you can either give us a call at 61733600875 and we can get you started straight away. So any questions, feel free to send them through. Otherwise, have a fantastic day and I look forward to catching you on the next update. Cheers.